and today I'm going to be explaining to you the benefits of using a limited company within a small and medium entity. So the first benefit, as is implied by the name, is limited liability. Now, what this means in practice is that the owners, or shareholders as they're known, within a business are limited for any liability up to their initial investment in their shares. Now, what this means in practice is that if a company, for example, comes up with an unexpected liability or has an unexpected liability forced upon them, which is over and above their assets, so means that they wouldn't be able to meet this liability, so it could potentially force them to close the business. This means that if the company did need to close, or the business did need to close, that the shareholders or owners wouldn't be able to be pursued any further for that debt, providing that there's been no fraudulent activity and all the rules and regulations of a company have been followed. Now, that's obviously fantastic compared to if that business was run by an individual or a set of individuals, because in that instance, if it was a sole trader or a partnership, for example, and that liability came about, then they would have no choice but to try and meet that liability some way or another, or else risk bankruptcy or something similar, personally. So that's obviously a great weight off the mind of any potential business owner and go down the limited company route. The next main benefit is a taxation benefit. So as a limited company, profits from anything, so whether that be trading profits, rental profits, capital gains profits, are all currently taxed at 19%. So what that means in practice is that if a company makes a profit of, say, £100,000, it will just pay tax at 19%. That means a tax bill of £19,000, notwithstanding any dividends drawn by directors or anything similar. Not by directors, sorry, by owners. But if that same business was, say, for example, a sole trader, and it was just one person trading on their own and they made a profit of £100,000, then a big chunk of that profit, up to £50,000, would be within their higher rate of tax, which means they'd potentially be paying 40% tax on quite a lot of those earnings, even if they didn't necessarily need to draw them out and they were just sat in the business, so sat in the company's bank account, for example. Which is obviously not fantastic from a business owner's point of view, and may want to reinvest those funds at a later date or use those funds to help grow their business. So that could potentially hinder that. So those are the main two benefits. Obviously, there are many more benefits, I suppose, of a lesser nature, and there are also a few cons to using a limited company. But if you did want to know any further details on how it might impact your business, or if it's suitable for your business, then want to get in touch with the details on screen, so you can call us on 01482 427 360 or email us on help@360accountants.co.uk, and we'd be happy to talk to you and have a chat about your business and see if the limited company option is right for you. Thanks for your time. Goodbye.